Yeah, thank you for coming down so early on a Saturday. That is a real dedication, and obviously thank you for Master Investor Show for inviting us back once again. So obviously, first of all, the disclaimer, so the legal parts we should cover. Obviously, I'm not providing any financial advice during this talk, purely factional and just running you through some of the portfolio. As a listed equity at NESF is, obviously capital is at risk, investments may go up and down. And finally, from a historical track record perspective, obviously the historical track record shouldn't be an indication of what happens in the future. So that's the exciting legal stuff out the way. And let's run through what I'm going to talk about today. So my name is Peter Hamid. I'm a Senior Vice President at NextEnergy Capital. NextEnergy Capital are the investment advisor and investment manager to NextEnergy Solar Fund. I'm going to run you through NextEnergy Solar Fund just to give you an idea of what we do, super high level, not going to complicate things. I'm going to look at the group which looks after NextEnergy Solar Fund, which is NextEnergy Group. Going to give you a quick strategy update, so where we're seeing growth and opportunities in this sector. But I think one of the most important things to talk about today is really the opportunity. As a retail investor, obviously, you need to look at your portfolio wisely. A diversified portfolio across kind of equity and income is super, super important for long-term diversification, and there's a really good opportunity in NESF at the moment. And I'll talk around some of those driving points, what's been going on in the market, and why NESF is NextEnergy Solar Fund is a good investment. So just full disclosure, I personally hold shares in NextEnergy Solar Fund, and as a group, there's 300 of us at NextEnergy Group. There's about 2.5 million shares being held, so we all have skin in the game here. And finally, I'll just touch on key takeaways, so kind of what we've covered on today, and I think what the key things you should go away and think about at the end of the session. So first of all, an introduction. So NextEnergy Solar Fund sits in the NextEnergy Group. As I said, NextEnergy Capital are the investment advisor, investment manager. NextEnergy Solar Fund is an investment company, so therefore has no employees. It has an investment advisor and investment manager, which is NextEnergy Capital, and an independent board. Super important to look at the governance from an independent board. There's 5 members on that board, and they are ultimately responsible for the top-level decision-making based on the advice the investment manager and investment advisor provides. We manage about 4 billion of solar across the world, across NextEnergy Capital. So we have the listed fund, FTSE 250 investment company, which is NextEnergy Solar Fund. We also have private funds in the market where we deal with institutional investors, funds which look at new build solar in the UK and international solar as well. So we've deployed about 3 gigawatts of portfolio of solar across the world. So we've got exposure in the US, Chile, Portugal, Spain, Italy, and Greece. As I mentioned, about 300 employees now, probably just over that. So the investment management arm, we're the ones who are raising the funds, we are doing the M&A, we're buying the assets, and so forth. Really important to look at, once you've bought these assets, how you actually run them. So Wise Energy are the operating asset manager. So the best way of looking at this, once we've acquired an asset or built an asset, that asset has a lifetime frame of about 30, 40 to 50 years, so you need someone to look after that, and that's exactly what Wise Energy do. So they have their own software where we're running these solar farms across the world, and there are about 1,500 solar and battery assets being monitored. Also really interesting at the moment, the changes in technology have meant that we are monitoring these assets in lifetime, so we're using drones to fly over the solar sites to look at any anomalies where we can fix the assets quickly and keep these things running and generating cash. Starlight is a relatively new company within the group. That is our development company. So that's looking at greenfield, brownfield, solar, and energy storage projects across the world. Really important mix as part of the group because it really provides the full 360 life cycle of solar. And also, we are a specialist in solar. Solar is our bread and butter. It's what we do. It's what we love. We are the biggest investment manager and group who specializes in solar in the world, which is obviously a really good thing at the moment, given the energy transition and every government's agenda to really kind of move towards a net zero future. We have 2 other small components of the group. Next Step, which is the incubator fund, which works with universities to look at new startup technologies which are coming through, and also a foundation where the group donates at least 5% of its profits per year to that foundation, which does some really good stuff across the world. So introduction to NextEnergy Solar Fund. We're a specialist solar energy and energy storage fund. We're listed on the premium segment of the London Stock Exchange. We're a FTSE 250 vehicle. The GAV at the moment, so that's gross asset value, so it's basically equity plus debt, is around 1.2 billion, so very large in size. We have about 100 operating solar assets and some private investments, which I'll touch on briefly later on. The reason why I'm talking to you today is NESF is really an income play. So at the moment we have a very high dividend yield, which is covered. And obviously, as we're saying, we're coming up to our 10-year anniversary. We've got a really strong track record of that kind of managing and delivering that dividend. So just quickly on the dividend track record. So our 10-year dividend growth is around kind of 4.75% on average. And as I said, that dividend is covered. So we pay an 8.35p dividend for the end of this financial year, which is the 31st of March. And we will then be announcing the next increase in the dividend in May. So as you hear, solid track record of delivering returns for investors. The investment objective of NextEnergy Solar Funds is to provide shareholders with attractive return in the form of income, in the form of dividends, and that's exactly what we're proving here. As mentioned just at the very beginning, since IPO in 2014, we've paid about 333 million worth of distributions to our shareholders. So NextEnergy Solar Fund, also a ESG investment. As you can imagine, we invest into solar. These are physical assets on the ground, and we're recently going to energy storage. So not only is it an attractive financial return investing in solar, there's a mission behind everything we do. So the mission for NextEnergy Solar Fund is to lead the transition to clean energy. And that's exactly what we do by investing in solar. From a board level, we have an ESG committee. So once again, not just looking at the financial returns, which are really important, but also the ESG benefits, how we source the panels that come onto the solar farm, and all those sort of things as well. And there's a really interesting biodiversity element to our assets at the moment. So obviously looking at the next big thing, which will be natural capital and how we're going to implement that across the fund. So the fund itself powers around 334,000 homes per year, and that's a lot of clean, renewable energy to be pumping out. As once again, all this data is available on our website, nextenergysolarfund.com. So conscious of time, I'll just give you a quick overview of the portfolio. So 100 operating solar assets with an installed capacity of 933 megawatts. Just giving you an example of how many homes that would power. But I think the interesting thing here to highlight is the majority of our assets are here in the UK. So as a UK investor, we've probably got an asset near your backyard somewhere. Looking more internationally, we have got exposure across the world via, it's called MP3 here, that stands for Next Power Free ESG. That is a private solar fund which is managed by NextEnergy Capital. NextEnergy Solar Fund invested about $50 million back in 2019. And the real reason for that was to give us exposure internationally without taking any risk on the ground, because we already had teams working on that private fund on those grounds in those locations. But the real unique thing for NextEnergy Solar Fund is the fact that making this type of investment, we're investing alongside some of the largest institutional, well-known investors in the world, and it opens up a whole new opportunity of accessing new assets which our competitors and peers can't access. So how does solar generate revenue? Once again, we own the physical assets. We are a generator. When the sun is shining, we have solar panels in the fields, collecting electricity and connecting it to the grid and selling it via third-party off-takers. I wouldn't worry too much about the details on this slide. It's really just an indication of kind of how things flow. Important point to make here from a retail investor perspective is around the income. So we're not a full payout strategy. We do pay our cover our dividends, but anything we do not pay to shareholders, we reinvest back in the fund to grow. And just highlighting here some of the stuff around battery storage. We're also expanding, and I'll touch on the growth section, into co-located and standalone energy storage, which is super important for the future of this fund and the growth. As you can imagine, when we increase renewable penetration across the UK and across the world, you're going to need energy storage because you're increasing the intermittency of the power. Obviously, you can only produce power from solar when it's sunny and power from wind when it's windy. So energy storage is going to be a crucial point and a crucial growth perspective for the fund. So when we generate that revenue, we have a high visibility of future cash flows. How do we do that? We have an in-house hedging team. And this team looks out into the liquid market where you can sell power. This is up to 3 years in advance, and we're locking in hedges as we go along. And the rationale for that is we want to provide our investors with that visibility of those cash flows so we can service that dividend. Once again, we've got that track record of coming up to 10 years of servicing dividend. This is how we do it, because sometimes you get volatility in the market. For instance, COVID, when everyone went home and the power prices dropped, we were well hedged and well protected through that session. So once again, this proactive hedging strategy, locking in those cash flows, getting that dividend paid. So from a strategic growth perspective, so we talked about the income, the dividend, how is this fund going to grow? So really, from a solar perspective, we've got international expansion. We're doing co-investments in Spain and Portugal at the moment, so increasing our exposure there. We're currently recycling some capital, so we're selling some assets, so then we can reuse that capital and invest into higher yielding assets. We could also use some of that capital to pay down debt. Obviously, interest rates are quite high at the moment, and the potential to do share buybacks, which I can touch on in a bit, and one of the unique things about the investment company sector. Just quickly touching on energy storage. So obviously, there's two ways of doing energy storage on a standalone basis. So you can be strategic in terms of where you place these assets. So for example, you place them in an area where there's a high concentration of wind coming offshore, onshore. You can utilize batteries in those sort of locations. So via various substations, you buy electricity when it's low and you sell when the price is high. And then you've also got the co-located aspect as well, so really important from a solar perspective. Here in the UK, we've got 92 grid connections from our solar assets, and that's 92 opportunities where we can co-locate batteries. And that's a real game changer in terms of how you sell that power. So once again, diversification. So hopefully that's a really kind of top level of the fund. Now I'm going to talk to you about the actual current opportunity. So this, hopefully, be the interesting bit. We shall see. And what probably is on everyone's mind is kind of share price, the market. It's been a tough market, right? The last 18 months has been pretty grueling, especially here for UK investment companies in particular. So investment companies are really kind of a sentiment of UK and investors' appetite in the UK market. And as we've seen, there's discounts across the board. So first of all, the opportunity on solar. Solar is a relatively straightforward asset class. There's no moving parts. It's an abundant energy source. So I've put a quote here. More solar energy hits the earth in a single hour than what is being used in the entire year. So that's quite a powerful fact, right? So we've got the energy source. It's just a case of we need to develop more solar, get it grid connected, and then generate electricity. So the energy source is there. From a cost perspective, the price of solar has fallen circa 90% in the last 12 to 13 years. So huge amount. And one of the rationale for that is government subsidies have done exactly what they should have done across the world. They've taken an asset class, which was relatively kind of immature at the time of 10, 12 years ago, and really developed it into a full class and full class asset class, delivering and being able to reduce those costs. And also, there's no moving parts, as I said, so it's a relatively straightforward technology. We know when the sun is going to come up and go down in a year's time. Obviously, here in the UK, it might be cloudy, and a common misconception is solar still works when it is cloudy. So what has really driven the large discount across the industry? So once again, the NextEnergy Solar Fund is an investment company, and the investment company has really been hit hard, not just across the renewable investment company space, not just across private equity, but every single investment company has been struggling. And there's two rationales for looking at that. The investment company space is a really good vehicle for holding these type of assets. If you think, once again, there's no employees, it's tax efficient. But one thing it's heavily weighed down is the fact that international investors don't really get the investment company space. So what we've seen, as I said, from a UK sentiment point of view, is investors, because they can, investing elsewhere. So what we've seen, and this is just an example of NextEnergy Solar Fund share price since March 2021, is investors moving, and this is institutional investors as well, moving funds away from these type of vehicles and because they can, and investing in the likes of the bonds, investing in international markets, because once again, these type of vehicles are long-dated infrastructure which trade as an equity. So obviously people can make their minds on where they kind of distribute those funds. The primary driver for kind of what's been going on over the last 18 months is purely down to the Bank of England base rate. So obviously we've seen the most aggressive hike from the Bank of England over the kind of the last 40 years. And I've highlighted on this graph with circles some of those kind of key movements. And when obviously the Bank of England increases the base rate, there's pressures on inflation, there's pressures on interest rates increasing. From an investor's perspective, that has changed the gilt yield market completely. I imagine a lot of investors here will have kind of investments in gilts, and the prices we're seeing in the gilts market have been pretty crazy over the last couple of years, and obviously as the risk-free rate changes, investors has been moving. So funds have been flowing out of this sector, which this is the interesting thing when it comes from an opportunity perspective. At some point, the tides will change and those funds will start flowing back in. So from an investor, this is really the once in a generation or lifetime opportunity to invest into this fund, because we're trading, which I'll touch on in a moment, around a 30% discount. So not only would you get the dividend yield, which is currently between 10 and 11%, you've also got the potential for that capital appreciation when this sector recovers. This sector will recover, it's just a matter of when, and there's going to be multiple catalysts for that. You'll see, obviously, as inflation starts to come under control and the Bank of England reduces interest rates, you're going to start to see shifts of flow back into the sector there. I wouldn't be surprised if we saw consolidation, so M&A activity actually in the sector. Once again, that's enough for a re-rating. You're seeing people selling assets to justify the net asset value. One of the interesting things and the nuances about investment companies is you have a share price and a net asset value. For long-dated infrastructure, you can't value a long-dated infrastructure asset every single day like you can with listed equities. So that's a really important point, because we have quarterly net asset values, and we're seeing assets sold in the market way above those values, right? So it just shows you how undervalued and unjustified the current discount rate is. So once again, I've highlighted here where we stick out in terms of the peer group. So from a dividend yield perspective, we're kind of sitting at just below 11%. So once again, high income yielding, perfect for holding in an ISA or a SIP. But also alongside that, you've got the appreciation when we recover from the discount NAV. So that 30% will shrink, and obviously there's different mechanics we can use as an investment company, and the board can obviously start implementing share buybacks. And probably one of the only reasons why we're standing at an anomaly at the moment is the fact that some of our peers are already starting doing share buybacks. So you can see how that's moving the share price. So one to look there and an opportunity to look at. So quick one from an opportunity perspective, really important to look at this type of vehicle as a long-term investment, but also look at it from a total return perspective. So if you look at just share price, it will look like we're down kind of 20% this year, but since IPO, take into account the dividends that we have paid, you're looking at a 40% return, even now, given the kind of where we're trading over the last kind of couple of months. So from a long-term perspective, this should be a really solid position to hold in your portfolio. Once again, no one puts all their eggs in one basket. It's all about having a diversified portfolio. So this should hopefully get you thinking in terms of where this could possibly fit within your ISAs or your SIPs. So conscious of time, and we've got a minute and a half. So a couple of key facts. First of all, any information is available on our website, so please do have a look. As I mentioned, NextEnergy Solar Fund is a closed-ended investment company. We launched back in 2014, so premium segment of the London Stock Exchange, and the ticker is NESF. We have an investment policy. I won't go through all the details there, but that basically just tells investors where we can invest, and obviously alongside the investment objective of delivering income. These are kind of where we invest and how we do that. And then finally, just to kind of recap, so hopefully I've touched on a couple of the key points around the opportunities. We could spend a whole morning, to be fair, talking just about the funds and then talking about the opportunities in the market, but hopefully from a kind of a 1,000-foot view, I've given you an inkling into kind of what the opportunity is for NextEnergy Solar Fund, a bit about the fund itself. We are on stand M3. I've got quite a few members of the team with me this morning, so if you do have questions, it's probably best just to come and speak to us directly because everyone has different questions and different things from that side. But personally, like the fund as itself is probably in the best position it's been in since IPO. Take away the share price performance, so underlying assets are performing exactly as they are. The opportunity here is what's been driven by market conditions, really, from a macro side of things. So yeah, please do check us out. If you've got any questions, please come and find me, and I've finished exactly on time. So thank you very much for your time today.